India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning, folks. And you know, Navratri is going on. Today is the red color. And we have so much, by the way, folks, we have so much red going on in the CNBC newsroom and, you know, just outside the studio as well. Who knows, all this red from India may finally force the market to show a little bit of green. Some kind of contra-trend theory. It's my own. I mean, it has no basis in any sort of reality.
Nothing wrong in hoping, right?
Well, I think, you know, we were hoping for... you know, we were saying that we'll hope for a bounce yesterday. We got a bounce. It just got sold into. So let's see. And, you know, a lot of selling, FI selling, and I think that's been the problem. Let's take it one by one and tell you what you need to know. So risk-off session last night, so no help from global markets, especially US markets. S&P is down about 1. The NASDAQ is down about a little more, 1.25% or so. So those are changes. No new Middle East headlines. In terms of sort of attacks or counter-retaliation, etc., between Israel and Iran. But there is essentially tensions which remain very high. And I think that is the one thing which permeated across at least US asset classes. The CBOE WIX jumped 18% to about just about 23. And that's a big one at that. The 10-year... So all of this is happening at the same time that as the US jobs data last Friday showed, the economy seems to be in pretty good shape, at least the labor market. So the 10-year has risen to above 4.02, left off at 3.93 the previous close, and it went above 4 yesterday during our session in Asia, and it's closed in the US session above 4%. The dollar index steady, nothing much last night, but I mean all of this is dollar positive. 102.5 is where we left off. The big changes come in for oil prices, right? I mean, oil prices now have jumped about nearly 4% to just under $81 per barrel. You know, the 2024 highs on December Brent is 85 to 86. So that's you know, the level. If the tensions don't abate and markets dislike uncertainty more than anything else, I mean, it's the anticipation of conflict because you don't know, you can't scope the shape and size of it, which perhaps keeps markets more on edge. And of course, we'll see what eventually does happen, but markets are anticipating something to come through. So this is, of course, a clear negative for India, which is a very large oil importer. So, I mean, if you look at the 2-3 macro market variables we look at every day, it's not looking good. You've got the US market equities, which are down, you know, dollar, which is firm, and of course, oil, which is up 4% as well. Now, China is set to reopen today after holidays. And I think it's already open. I mean, the mainland markets are up 10%. I think the Hang Seng, the last I checked, 5 on Shanghai. And the Hang Seng market was down the last I checked. Maybe some rotation out of, you know, 8 shares into sort of mainland shares. That could be at play. The big talking point, which Surabhi will talk about more, is the NDRC, which is China's top economic planner, which is expected to hold a press conference and announce stimulus measures. Again, I mean, you know, they got to walk the talk. And so far it's been talk in terms of, you know, press reports and speculation about whether it'll be this or that in terms of fiscal stimulus, which markets are most excited about. Now we'll hear from actual authorities in China. And, you know, I think very quickly markets will reprice expectations once we get that. So China is back in that sense. Now, just to circle back the levels here, markets have sold off. Nifty is down about 6% from the highs. Bank Nifty is down a little over 7% from the highs. And it's happened very quickly, right? I mean, 5 sessions, the markets lost about 5.5 and 7.3 on the Nifty and the Bank Nifty, respectively. I think the starting point is it's all good to expect a bounce after such a short, sort of, you know, concentrated sell-off. But what would tell you that maybe we're in for a short-term bounce at least is that a daily positive close on the indices. You need that first. Whatever can happen through the course of the day, you can start higher, you can sell off, but by 3:30 you need a daily positive close, and then I think we can work from there. So just to put the levels in, Nifty is now retraced 61.8% of the rise from the August 5th lows, right? That's what we're looking at. So the low in August, on the 5th of August, was 23,894, and the all-time high was 26,277. We've retraced 61.8% of this entire rise now, with the near 6% fall that we've seen on the Nifty. The supports come in very, very short term here. Yesterday's low, let's see if you are able to, these are markers. Let's see if you're able to hold on to this tentatively. 24,694 is the low yesterday. Daily lower Bollinger Band comes in at about 24,650, 647 to be precise. So that's the next number. I'm only putting very, very near-term levels just as markers to see if the market holds. Bank Nifty support at 49,654, which is the 14th of August low. I mean, the Nifty Bank has also, by the way, gone back to the August lows. The absolute low is that number on your screen, 49,654. So we'll see. And of course, on the upside, the resistance will be very short term, 20 hourly, which is 51,564, and the 40 hourly exponential, which is 52,136. I mean, I think large caps maybe with a little bit more pain, closer to kind of making some sort of not bottom per se, but perhaps this leg of selling coming to a close. You look at what's happened to names like Reliance, HDFC Bank, many others in this space. So maybe we are perhaps closer to the pain being a little over. But mid caps, small caps, I think that is where perhaps the pain still lies. So we'll have to watch as we go forward. But let's take it step by step. Let's see if the market will be able to hold some of these levels. GIFT Nifty is indicating about 100-odd point lower start to begin with. Surbhi.
Okay, absolutely. So we've got a slightly challenging handover from Wall Street, but it's all eyes on China. And there's so much going on with that market. The market, after its 7-day break, actually opened with a 10% gap. But that gap up opening is already getting sold into, because right now the Shanghai Composite is up only about 5%. So half of those gains have been given off already. Not just that, there's dramatic profit taking that's underway in Hong Kong. The Hang Seng is now down 6.5% to 7%, and this coming after a near 30% rally in the last one month. So big moves happening in China. So I just want to sort of focus on what the expectations are from this big press briefing that should be, I think, underway. In fact, we're getting some flashes on it now. Can fully achieve 2024 economic goals. Remember, this is something that economists have been talking about, that China may miss its 5% GDP growth estimate for the current year. The expectations, to just run over, the street is working with a total stimulus package of anything between 1.5 to 2 trillion. So let's see if that gets delivered or not. But beyond the quantum of the package, the market really needs specifics. Can the policies actually stimulate consumer sentiment and consumer spending? More importantly, can they shore up that confidence and boost wage growth? Because China seems to be suffering from a demand problem, not so much supply. You can keep cutting interest rates, but there has to be demand for housing, for consumer goods, and that's what the market wants to hear. So let's see. There are more details trickling out, but right now, the response from the Hong Kong market and the mainland China market itself, there is a risk of a lot of these announcements underwhelming a market that's rocketed 30% in the last 1 month. The other big focal point continues to be oil. Prashant highlighted some of the issues that led to that massive surge. We had some rockets getting fired, apparently from Hezbollah onto Haifa, which is one of the key cities in Israel. There is no response from Israel just yet, but the market is on the edge as the price remains above $80 a barrel. By the way, there is a hurricane in the Gulf of Mexico to complicate matters as well. It's been categorized now into a Category 5 storm. This is Hurricane Milton. So let's see if that leads to any kind of a shutdown in the Gulf of Mexico. That's another watch point. The third watch point for us here is, of course, the FPI selling onslaught, and there is no let-up in that. Once again, 5th day running, we've got a massive sell number from the FPIs, about 8,300 crores of selling, but there was a huge amount of buying as well from all of the lows that we were seeing yesterday. 13,000 crores of domestic institutional buying. You can't take that lightly, but just the sheer force of FPI selling was enough to make the market close near the lows of the day. There are a couple of very interesting stocks that will be in focus as well, while the market headline is going to be the big one. And I'll watch out for 3 specifically. Number 1, Ola. We all know the headlines. We all know what's going on social media. But beyond that, there's regulatory action. The Central Consumer Protection Authority has issued a show cause notice, and Ola has acknowledged that in its notification to the stock exchanges. Now, what is the Consumer Protection Agency saying? They're saying that there is potential violation of consumer rights, there's misleading advertising and unfair trade practices. Ola has 15 days to respond to this show cause notice, and let's see how this progresses. We've seen an 8% damage yesterday on the stock price. Let's see what happens today. HEG, Nigel is telling us that they've bought, very interesting, they've bought just a little over 8% stake in an international rival company that also makes graphite electrodes. So we'll wait by to understand more on this, and Nigel will tell us more about this stock. And last but not the least, watch out for Godrej Consumer. Let's just look at a one-year price chart. We remember what happened to Dabur when they came out with their Q2 update. Godrej is saying that while the sales growth will continue, there could be a risk to their earlier EBITDA projections. So that remains another important watch point. The market has fallen 6% down on the Nifty, 7% on the Bank Nifty, and the mid-cap index is down about 6%. So the indices are set for a bounce. Will that happen if China's announcements underwhelm the markets today? I think that's the critical question that we're looking out for.
Well, we're due for a bounce. I don't know whether it's today, tomorrow, but sometime during this week, we're due for a bounce only because the way we have fallen. It's been a very, very sharp fall that we've seen. And the bulls, they're in search of good news. A couple of factors that they'll be looking forward to. One would be de-escalation of the Middle East tensions. That's what will please the bulls. And the second factor would be a better performance from the BJP in the state elections, because that's what's got markets in a bit of a tizzy. Remember, there's de-escalation in the Middle East, then you'll see crude oil prices that'll cool off, and if the BJP does better, then you'll have that confidence, that continuity of policies in the right direction. But these are hopes, right? Let's get you a couple of data points then, because hope is not a data point. And I was going through a note that came in from Samco. They said that when the markets fall 4% in a particular week, more often than not, in the next week, in the next month, or in the next 3 months or so, you do see a bit of a bounce that comes in from the Nifty. So, if you're clinging on to a data point, when the markets fall 4%, in a single week, we do more often than not get a bit of a bounce out there. And the last time this happened was in 2022 as well. Both in May as well as in June, we fell 4% and then we bounced off that. The problem pocket, that's the Nifty Bank, down 7% in 6 sessions. The other problem pocket, the FIs have sold 10,000 crores on a daily basis on an average for the last 5 sessions. Now they've raised considerable amount of money. If they had to allocate in the Chinese market, then today's the day. So I think from here on, maybe that FI sell number may not be as large. We'll have to wait for the end of the today's trading session. But, they've sold closer to around $5 billion in just 5 sessions. That's a little bit excessive, according to me. Who's buying though? And this reminds you of what happened in June when the FIs were selling aggressively, mutual funds as well as retail were picking up stock. And that's precisely what's happened this time around as well. NSE gives you dated numbers for 2 sessions ago. So that's the data point that came in last night as well on the NSE. What about positioning? Well, the clients are net long now, and they are the net long positions is the highest we have seen all the way since June. While the FIs, they have turned things around. Now the FIs, they are net short with close to 35,000 contracts on the short side. Look at the way it's turned around, 3.5 lakh contracts on the long side to 35,000 contracts on the short side. And the client positioning, as I said, more than 1 lakh contracts on the long side out there. The PCR is at the lower end of the range at around 0.67 odd because we've seen aggressive call writing. And the call writers are getting very, very confident. But on the downside, the 24,700 put as well did see a fair bit of action. And that's what gives you some hope. So let's get to a crucial data point now. What are the levels you're looking at on the downside? 24,530. That's where the 20-week moving average comes in at. So you don't want this level to break out. Otherwise, it opens out downside for further levels, opening up towards the 24,000 mark and sub those levels. The weekly expiry today of the Nifty Financial Services Index, so we'll keep an eye out on that. And since crude oil prices have moved to the highest we've seen in multiple months, well, 2 beneficiaries would be Oil India as well as ONGC. So I'll keep an eye out on both these 2 names.
All right, a lot to track, and we'll do that as markets open. By the way, the election results are also at the bottom of the screen. This is, of course, the counting is underway. The exit polls, of course, gave Haryana to the Congress, and we'll see if the actuals match. Now, let's get you some more views. This is Chetan State of Namura, who says that with renewed interest in China equities on the back of recently announced monetary and liquidity measures and market expectations of more fiscal stimulus ahead, he thinks there is a rising risk of some near-term underperformance of Indian equities against the broader Asia ex-Japan index. However, he does not think this will be a long-lasting period of underperformance, as he thinks the structural story of India remains quite attractive, and should valuations revert to more palatable levels, foreign and even domestic investors would likely look to re-enter the market. He says MSCI India currently trades at a forward PE of 24.1 times, and he thinks valuation levels going back to near 21 times should become an attractive point for investors to restart building positions in the market.
Okay, we've got another view coming in. Jonathan Garner of Morgan Stanley says defense is safer than offense in the current highly complex environment. He says they are incrementally more concerned on oil price and global growth risks to cyclical markets and sectors. He says China policy easing is important, but valuations have already re-rated substantially. He adds geopolitical risks, the US election and 2025 policy uncertainty are prime concerns for us through October and November. He says India remains their largest overweight market.
Well, absolutely. Let's welcome in Matt Orton, US market strategist and chief market strategist at Raymond James Investment Management. Thanks very much, Matt. Great to have you with us here. Thank you very much for your time. You know, the big question is the question on flows. So let's just begin there. Although even as we're starting to get headlines out of China, but I think we'll maybe give it some time, and then we'll get a full perspective of what's happened and whether the actual measures match the rally that we've seen there. Now, tell me if this is the right way to look at it. So if you look at FII assets, FII AUM, foreign AUM in emerging market funds, it stands at about $1.2 trillion. It stood at $1.2 trillion or so. And should we, a 10% swing means about $12 billion. Now, we've seen selling across emerging markets over the last 5-6 days as China has continued to rally hard. Is that could we look at this data point to kind of see, well, how much more to go? And how does one use this data if there is any use at all? Go on.
Hey, Prashant, always good to see you. And I think, looking at the emerging market complex in totality makes sense. I think to get a good sense of just the flows that are happening with FIIs is even taking simple ETFs in the US. So you look at FXI, which is the most liquid Chinese ETF. You had $3.7 billion flow into that over, call it 2 weeks, which is incredibly significant, the most significant amount of inflows we've seen, versus India year to date for the top 2 ETFs in the US alone. We've only had about $3.2 billion come in on an entire year to date basis. So there's a significant imbalance there with respect to the flow of funds. So I think that just speaks to the fact that investors have consistently underweighted India with respect to the entire broad A or emerging market complex. And that underweight is only becoming more persistent as you see a lot of assets flowing into China. And the issue that causes is when you have disappointments. I've been following some of the headlines that have been coming from the conference today. We don't have any new news, and the market's expecting to have new news, and there really has been no significant policy updates there. And so you're going to see a pullback. So I suspect once that rising tide stops lifting all boats in China, you're going to start to see some of that capital take profit and move back to other areas. So I don't think this is time to say India is done, that this is over. I think India is only becoming more attractive because it's actually buttressed by real fundamentals, as opposed to China, where it's still a show me story, and I'm still waiting to see actual measures that are being put in place.
Matt, hi. Good morning. Good to have you on. That exactly seems to be the problem right now, right? The Hong Kong market, the Hang Seng, selling off 7% as we speak, and the mainland gains have been pared down to just, I think, 4% now from that 10% surge at the open. What is it that could keep the China market going? I know everyone's talking about direct consumer spending, money in the hands of the consumer for direct demand boost. If that doesn't come through, and if the measures are more indirect, then do you expect this whole sort of sell India, buy China, or sell other emerging markets, buy China? Will this trade start reversing quickly, or will people preserve their bets?
Yeah, I think the trade will slow down considerably. I think the bets are still going to be on because I think investors are going to wait to see if economic data actually improves. At the end of the day, China was a significant short position on the part of a lot of investors. It just had been under-owned. Valuations across a lot of parts of the Chinese market are still arguably very cheap, even after a 30+% rally. So I think there's going to be a little bit of a longer leash But like we're seeing today, the leash is still there. I think investors are going to be increasingly impatient with respect to seeing results or actual policies being implemented by the Chinese government. And if we don't see that, and I think we really need to see on the area of probably 5 trillion yuan of fiscal stimulus that's directed towards the consumer in order to actually hit GDP growth targets and really instill confidence in this investment savings issue that has put China into secular stagnation. If we don't start to see progress towards that, I do think investors are going to start to bail. And as a result, I think you're going to start to see some of those flows reverse back into India again and try and find other parts of the market where the fundamentals are there. I don't think that needs to happen to see money start to flow back into India, but I think that would certainly accelerate the story.
You know, it rarely happens that it's so clear cut and clean, right? That look at what the GIFT Nifty is trading, right, Matt? And for our viewers, GIFT Nifty has recovered over 100 points. 18 minutes back, when we started the show, actually less than that, we were looking at the GIFT Nifty down 100 points. That's down 20 points now. And I think, so this is GIFT Nifty's gone like this, and you've got the Chinese index, the Hang Seng specifically, which is actually climbed lower. So it's kind of a very clear sort of trades on both ends of the spectrum. And as I said, it rarely happens in such a clean and pronounced way, but I think things got to a bit of an extreme on both ends. So that is what is playing out. So quite incredible, Nigel.
And that extreme positioning, I think, is gradually going to, converge, and it's coming back to normalcy. So I guess that's why it's giving us added reason why we could see some kind of a relief rally here in India. So let's see how that goes. And crude oil prices as well, I think from the highs that we saw overnight, $81 per barrel, that's come off a little bit. So that's good news as well, because that's the worry from a bullish perspective. Now moving towards $79 per barrel. So good downtick is what we've seen out there. Matt, good to see you in the show as always. Well, we've got a bit of a dip here in the Indian markets. Everyone was asking for a dip. Well, you've got more than your share, 5 to 7% correction on most indices in a matter of 5 sessions. And you have kept your shopping basket ready. What all do you like at these levels?
Yeah, hey, Nigel, good to see you. And I think that's the most important message to give investors right there, is that when the fundamentals remain in place, like they do with India, have your shopping basket ready, because I've been encouraging our clients, there's no need to chase the market. Use downside opportunistically. And the downside we have in India, I think, is very, very attractive. So you look at just some really high quality names. I've talked about them here before, but I still have a lot of conviction in names like Mahindra and Mahindra. I mean, the pre-orders that you've had for rocks are incredible. You're after coming out of monsoon season, you're going to start to see, I think, the farm implement business pick up, which is accretive to margins as well for the company. So I think there's opportunities there. Same thing with ICICI Bank. The growth story there of finding a solid upper teen ROE compounder is very, very difficult to find. And a name like that, when you do have the opportunity to pick up on some downside, that continues to look very, very attractive. And then China or not, I think some of the commodity names that are related to steel, related to infrastructure, those parts of the market still look very attractive. And I still also like names like Adani, SEZ, because it's the infrastructure theme again, but ports bringing in, developing, also investments that the company is making overseas with a very strong balance sheet. That's very, very attractive to me going forward. So I think this is a great opportunity for investors not to panic, but make sure that they are putting money into high quality companies going forward. And that's what's going to serve them very well over the long term. So I look at this as an opportunity.
Well, good to have an optimistic view in the morning. Matt, thanks a lot for joining in. And as we went through that conversation, the SGX, the GIFT Nifty that was down 100 points, now it's moved into the green. Wishing you a good day ahead and looking forward to chatting up with you rather soon. Well, we have a lot of stocks to focus on as well, and we'll get to that in just a bit in our special Top 10 segment. But let's run you through the list. We're looking at Nykaa, High-Tech Pipes, HEG, Oberoi Realty, Yes Bank. All of them will be reacting to positive news flow, while we have a few more stocks that we're looking at. Tata Motors, Ola, Godrej Consumer, and Shoba. All of them will be reacting to negative news flow, while crude sensitives as well could open in the red.
Okay, well, let's quickly tell you what's lined up here up ahead. So at 8:30, Amnish Agarwal of Prabhudas Leather will be joining in on stocks. 9:20, Sandeep Badi of Macquarie and Markets. 9:30, the management of Nalco will be with us, and we'll talk about the Chinese stimulus and, of course, what the implications are for Nalco's earnings. Kavaljit Saluja of Kotak will be discussing IT earnings preview with us. TCS reports later this week. 9:50, we have a political discussion lined up. Haryana numbers and J&K numbers should be clear by then. Towards the end of the show, it's the economy. Lata gets chatting with Chetan Iyer of Morgan Stanley.
Okay, it's all happening here. A big reversal in mainland China markets as the market goes through some of the so-called stimulus announcement measures that came in this morning. Of course, other local piece of news that we're tracking are the Haryana elections, and you've got the tally up on your screen, and it seems to be sort of a big early lead for the Congress with the 25 seats. BJP is a close second at around 22. Okay, now we have more definitive leads that are coming through. So 42 for the Congress right now, BJP 16. With some of the other parties trailing behind. That's J&K, Congress in the lead there, 25 for Congress, and BJP gets 22, others getting 8 seats. So those are the early leads as counting continues on both of those in both of those states. Well, with that, let's quickly now also talk about the individual stocks that we need to keep our eye on, and our team is standing by with the CNBC-TV18 list of stocks to watch. Let's kick it off with the Tata Motors. We have some numbers coming through for JLR. Very morning. How do they look?
Good morning. So we're keeping an eye out on those wholesale numbers that have come for JLR. Not a pretty picture because they're down by around 10% on a year-on-year basis. What you're watching out for is 87,303 is the overall JLR wholesale number for this quarter. Now, other than that, quarter-on-quarter basis, also we're not seeing anything exciting, down almost 11% in terms of wholesale numbers. What impacted the numbers this time? Supply disruption as well as delay in dispatches in Europe as well as UK were the main reasons for Q2 being a bit of a weakness that we're seeing right now in Q2 for the wholesale numbers. Mix for Jaguar, that has also come down. Other than that, share of Range Rover Sport as well as Defender, that has seen a decline marginally of around 67% is now the share versus 68% on a quarter-on-quarter basis. So these were the main factors, but seems like this was mainly related to this quarter because the company has given an outlook. They're positive in terms of the production story as well as wholesale numbers in the second half of the year. So keeping an eye on that. Today expected to open up in the red.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Shivani, who's here to tell us about Ola Electric. Shivani?
Well, yes, Nigel, good morning, but not good news for Ola this morning. Sources have told CNBC-TV18 that Ola Electric is facing serious scrutiny from the Central Consumer Protection Authority, which is the CCPA. This is following a surge of complaints from consumers. What we learned from sources is that around 10,000 grievances have been lodged against the electric vehicle maker on the National Consumer Helpline, with consumers citing service delays, issues with refunds, and overall dissatisfaction with the company's after-sales service. Now, in response to these widespread complaints, CCPA has issued a show-cause notice to Ola Electric, demanding an explanation for the alleged deficiencies in service. Now, the authority is investigating whether the company's actions constitute unfair trade practices and potential violation of consumer rights. Specifically, the notice points out that it points to recurring concerns about delayed services and refunds, suggesting a pattern of negligence that has impacted many consumers. Now, Ola Electric has been given 15-day window to respond to this show-cause notice that went to them on 3rd of this month. Late last night, the company confirmed that it has received the notice and assured that it would be addressing the concerns within the stipulated time frame. Ola Electric also reaffirmed its commitment to complying with all regulatory allegations. Back to you.
Okay. All right, Shivani, thank you very much for that. So Ola Electric remains a key stock in focus today. Let's also look at some of the interesting consumer updates that came in, second quarter updates. Manglam is looking at stocks like Godrej Consumer, as well as, I think, Nykaa. Manglam, morning.
Good morning. So, for Godrej Consumer, the margin expansion thesis is under a bit of a cloud. Why do I say that? Because the company in its second quarter update has said that while they are on track for high single-digit underlying volume growth for both India as well as Indonesia, they will miss the target of mid-teens EBITDA growth for the entire year due to tough operating conditions in India. What are these tough operating conditions? Competitive pressures and inflation in palm oil prices, which will keep the standalone EBITDA in India flattish, as a result of which their consolidated revenue growth will be in mid-single digits and EBITDA will also be in mid-single digits itself. So a lot of the margin expansion that was factored in may not happen this time. So see some red for Godrej Consumer. For Nykaa though, it is a good performance which has come in a tough environment. The consolidated revenue growth of mid-20s, beauty net sales growth in mid-20s, led by retail, own brand, as well as their B2B business. Whereas fashion out there, the growth is in early teens, largely because there has been subdued demand in this category over the first half of this year. There could be recovery in the second half. So green for Nykaa and red for Godrej Consumer.
Well, Mangalam, it's a colorful morning. Stocks aside, wishing you a very, very happy birthday, my brother. All the best, good luck. And I'll tell you what, this year is going to be the most special for you. So, best wishes as always. And lunch, dinner, breakfast, the drill, brother. But, all the best.
Thank you so much, Nigel. Thank you so much for your wishes.
Well, from Mangalam, let's hop across to Sonal. She's here to tell us about some stocks that are in the news. Sonal, I hope you have planned something colorful as ever this morning. Tell us about the stocks. If you want, you can tell us what's the gift to Mangalam as well.
I don't have to worry when you're there, Nigel. So I don't need to worry about the gifts, the lunch, the breakfast. I think we'll plan it together. So that's not a problem at all. But talking about more serious things in stocks now, let's start with Sobha because there was a quarter two operational update and it doesn't look so good. Sales were down 27.5% on a sequential basis. There's a decline on a YOY basis. Realizations down 20.5% sequentially. Sales volumes down 23% sequentially. So it's a decline both on a YOY and on a quarter-on-quarter basis, something that we saw with Godrej Properties as well this time around. For Oberoi Realty, there's a fundraise that the company has planned. On 10th of October, they have a board meet where they will be raising funds via equity shares or any other permissible mode as well. For Yes Bank, they have received some money. It's a 454 crore rupee receipt for loan portfolio sold to JC Flower Asset Reconstruction Private Limited. So some green on that stock could be seen today.
All right, thanks a lot for that, Sonal. Well, I'm tracking two stocks. One is High-Tech Pipes. In yesterday, very few stocks ended in the green, but the street sense that, that QIP is likely to be open up. And that's precisely what came about. In fact, Nimesh had mentioned on D-Street Chatter as well, that's likely to be the case. So that was up 5%. Now, the floor price for that QIP has been approved at around 195 rupees. And I understand from sources that they're looking to raise close to around 600 crores and demand is quite solid on that front. Why are they raising this money? They're currently at around 750,000. They're looking to move to 1 million. Later on, they're looking to move to 2 million. And in their mix as well, they're looking at the VAP, which gives better margins to move to around 40% in the years to come from around 28% in the last year. HEG, interesting one. They've gone ahead and they've bought their competitor, who's a far larger player, I think, in terms of capacities. Graftech's capacity in comparison to HEG is close to 80-90% higher. But they put down 250 crores. They bought close to around 8% stake in the company. And it's a company that's in the same business, but a larger player. The counter argument is, why didn't you do a buyback and use that money for your own shares? But for the time being, it could be signaling that globally, graphite electrode prices are bottoming out. We know a price increase came in from one of the competitors as well. So expect the stock to open up in the green, HEG as well as High-Tech.
Okay, all right, got it. So those are two more stocks that are going to be in focus today. And of course, how can we forget the surge in crude oil prices with Brent above $80 a barrel? We have Manisha joining in with the latest from the oil markets. Manisha, morning.
Morning, and thank you for that. So, yes, the crude oil prices have had a one-way rally. When you look at the last 10 or 15 days, traded above $81 a barrel at one point in time in the New York session yesterday. And with that, the crude oil prices now are at a 6-week high. Remember, last week we've seen 10% of gains in the crude oil prices. So there seems to be more build-up in sense of net long positions here. Well, one is, of course, the Middle East tensions, which are escalating. Even as the U.S. president has discouraged strike on oil facilities in Iran, the markets, the kind of gain that we've seen seen in the last 1 week clearly has been all about a war premium. Apart from that, China opening today, an expectation that it would unveil more news, new economic stimulus has been supportive. And more importantly, Saudi Arabia, even as it has cut oil prices for US and Europe customers, has increased prices for its Asian consumers, and that clearly has been supportive. And because of the rise in crude oil prices, you have seen palm oil prices going again to a 26-week highs. I mean, that's because of the biofuel fact. Coal is trading at a 12-month highs. Even the rubber prices gained up by 6% overnight. So there clearly seems to be a spillover effect in various other commodities.
All right, Manisha, thank you very much for that. So that's oil, right? I mean, another 4%. Last night, as Manisha tells us. You know, there are flashes at the bottom of the screen. I think the Congress is across the halfway mark in Haryana. That's the update which is coming through. These are, of course, early leads, but it's ahead in 46 seats. So that's the update coming through. But, you know, this is well advertised in exit polls, etc. It all put the Congress at about 60 or so. So we'll see. You know, if this is going to be as per what the exit polls really showed. There you go. But these are very, very early leads which are coming through right now. J&K up on your screen as well. Congress 31, BJP 26. So 90 seats in total, trends in 71 of those. We take a break. We're going to come back in just a bit, but just to recap the news, the stocks. So stocks with positive news flow, Nykaa, High-Tech Pipes, HEG, Oberoi Realty and Yes Bank. Stocks with negative news flow, Tata Motors, Ola Electric, Godrej Consumer and Sobha. Of course, we're watching oil sensitives as well with this jump once again in underlying oil prices. Amnish Agarwal is our guest on the other side. Stay with us. All right, well, welcome back. You know, if you're just joining us, just want to quickly highlight the GIFT Nifty up on your screen because, I mean, you know, we've been sort of on, the program's been on for 40 minutes and we've seen such a swing. 8 o'clock, if you joined us, the GIFT Nifty was down 100 points. It's up 30 points now. So that is how dramatically things have swung. And if you're looking for reasons, look no further than what's happening in China because the Chinese market opened after 5 or 6 days of holidays, the mainland markets, the Shanghai, the Shenzhen, etc. And those markets opened 10% higher and they got about 3.5% left in them. That's the Shanghai composite for you. And I think the Hang Seng is down sharply as we speak. So, you know, you've been hearing about this rotation out of other markets like India into China. Well, you know, there is got to be a certain element of buy the rumor, sell the news. But the underlying stimulus announcements, and we'll sort of have them up in a bit from now, what's coming through, because there was a press conference which was scheduled, I think very, very important in that sense, in the very near term. Now, the jury for the 20th edition of the India Business Leader Awards met in Mumbai last evening. The 11-member jury was led by Bharat Forge Chairman Baba Kalyani. They picked the winners for a variety of categories covering business, public service, sports and entertainment. The winners will be announced on the 7th of December when the award ceremony will be held. The jury held a robust discussion for each of the categories in a meeting that lasted nearly 3 hours. CNBC-TV18 Shireen Ban sat down with the jury members after the deliberations to discuss the growth prescription for India over the next 25 years. When asked what India needs to do over the next quarter of a century to become a developed economy, the jury came up with several interesting responses. The crux of the discussion was about making India an innovation-driven and product-driven economy. Listen.
Manufacturing sector coming anywhere between 20 to 25% of the economy. You're looking at a manufacturing sector which is going to be 10x of what it is today. And we are already beginning to feel the surge. Although there are a lot of, let's say, headwinds in terms of the geopolitical tensions that are taking place, the entire Middle East war, the non-ending Russia-Ukraine war, and of course the new China versus the rest of the world campaign that has started. But this puts India in a very good spot. If we can get things right in the next 5 to 7 years, nobody is going to stop India.
For India to be competitive, it's very important that the infrastructure is built in a competitive fashion. When I talk about competitiveness, it's not the lowest costing infrastructure, but the quality of the infrastructure, the life cycle cost of infrastructure has to be kept in view. I don't think as a country we have yet given enough importance to quality. So I think what we need to focus on is good quality in good time.
I think digital is just one element of the whole thing. It really comes down to the basic aspects of confidence linked with ambition. If confidence links with ambition, you will get dramatic growth. And I think that's what we've seen in India, but I really think it's the beginning. India today is far more confident than India has ever been. That linked with ambition and setting the mindset where you think about the global stage as opposed to the local stage will just take us to a completely different level.
So definitely we need more investment in healthcare. And I keep saying that over and over again. The reason is that, we know the size of our population. The disease burden could be up to $3 trillion by 2035 if we don't do it now. So there is a huge urgency in building out infrastructure. Second, access through insurance, which is happening, but so much more that can be done. The third is to look at the quality of life.
Okay, so there you heard some of the top ideas from key business leaders, the IBLA jury, as they met last evening ahead, of course, of the big event that takes place later this year. With that, let's shift our attention back to the market. Given everything that's going on, there are election results pouring in. There's a reversal underway in Hong Kong and China. And we have Anuj right here with us in the studios. Anuj, so I think the Indian bulls have been beaten down quite badly last couple of days. What do you think? Do they have a chance today?
It reminds me of that शेर कुछ दिन की खामोशी पे शोर आएगा तुम्हारा सिर्फ वक्त आया हमारा दौर आएगा. That's what the bulls have always said to the bears. Surabhi, and I made these graphics when the gift nifty was down 120 points, but my sense is market is very close to some kind of a hard bottom. Now what exactly is a hard bottom? When you have a gap down on a bad news which is already priced in. So if you want to assume gift nifty as some kind of a gap down, perhaps we did see that. Of course, the gift nifty is low now becomes your most important number to track in today's trade. China opened after holiday, started with good moves, but has already cooled off quite a bit. And the biggest reason for our market fall has been this risk that FI money is moving from India to China. And that's well documented. Look at what FIs have done in last 5 days. They've sold 50,000 crores of stock in last 5 days. And a lot of that has gone to China. That's what the data would reveal. The West Asian geopolitical tensions have led crude back to $80 per barrel. And there is a probability of US interest rate cut actually being much lower than earlier anticipated. But all of this was priced in by the market at 3:30 yesterday. Dow futures were down, US Treasury yield was up to 4, crude was already at 80. And the market had already also priced in, by the way, the state election verdict because the exit polls were out. So in that sense, a lot of the bad news was priced in. And now a couple of factors. Yesterday's advance decline was 1:9. I mean, these are the classical signs of bottom formation. FI is turning net short on the index from being 83% long earlier. It's the first time that FIs have turned short on index since August 19, and it's the highest shorting by FIs in a single day since June 13. Everyone remembers the June 13 date, right? The put-call ratio, that's come down to 0.7. And one more data point, for last 1 year, the Nifty has not violated the 100-day moving average except on the election verdict day. And the current 100-day moving average is somewhere around 24,300. The only thing I would add is it doesn't matter where the market opens today. It matters where it closes, because the closing has been quite bad for the market. For confidence to come back in this market, for this theory to be right, you need 2 days of Nifty closing at the highest point of the day. I mean, this was saying we need a daily positive close to work with. I mean, point taken, Anuj. Thank you very much for that. We'll see if that does start to happen. We can see the broad shape of it. Well, let's take a quick commercial break here. Mitesh Thakkar and Sachidan Utekar will be with us with some technical trading ideas. That's coming up in just a bit.
Welcome back. Hope you're having a good morning. Well, the gift would be suggesting that maybe it could be a better trading session after 6 down days. The ingredients are in place. No fresh negatives is what we have gotten earlier this morning. So let's see how that goes. But we're due for a bounce. Today could probably be the day. But let's talk about stocks. Abneesh Agarwal, the head of research at Prabhudas Lilladher, joins us on the show. Hi, Abneesh. Thanks a lot for joining in. I wanted to ask you about Ola Electric. You know, the stock saw a big rally post-listing, and everyone was wondering what's going on, you know, because the stock nearly doubled from where it listed. But now it's back down at around 90 rupees and a lot of problems. Your view on the stock at around 90 rupees, how much of the bad news is in the price?
Yeah, good morning, Nigel. So there are actually spate of news which have been, say, coming in Ola. And if you look at the numbers of past, say, 2-3 months in particular, the numbers have not been that encouraging in terms of sales. And now this news of, you can see the frequent problem with vehicles that has been coming. So I believe it is going to a very, very competitive market, as I think we talked last time also, that I believe that all the incumbents, whether it is on the scooter side or the bikes, that they are going to eventually enter this market. But having said that, I think as the stock is approaching close to the listing price, I think it seems more like, you can say, that there could be some trading bounce back, but whether it will give any fundamental, you can say, upside from here, very difficult to say at this point of time, because ultimately your sales have to move up, and you can say all other fundamental aspects have to fall in place, which doesn't seem to be clear at this point of time.
Amnish, hi, great to have you on. I have more of a tactical question in terms of how to get to the market now in terms of the stocks to buy, and tactical short-term question really, because before the whole China issue hit us and this FPI selling started, there was anyway sector rotation, right? Money was going to IT stocks. There was some play building up on FMCG. So you had to sell out of the CapEx and the PSU space, and there was rotation going on. Then we were bombarded with the entire China issue. Now, if that comes to some sort of a pause today and there is a quick rush to buy India again, tactically, what sort of areas of the market would you get into? Would it be IT ahead of results? Would you look at FMCG? Or do you think money will go back and move to some of the CapEx and PSU plays? Basically, short-term tactical ideas for the market.
Okay. See, what has actually happened is that because the valuations have become quite rich in all the cyclicals, we saw a lot of money flowing into, you can say, IT, telecom, FMCG or consumer in the last 2-3 months. But today the situation is that there is an FI selling, but at the same time, if you look at the entire defensive pack also, whether these are consumer, whether these are, you can say, your IT services or you can say other pockets, the valuation there are also not cheap. Although the stocks there also, they have shown some correction from the peak. But having said that, today the market is actually looking out for some hiding spaces there. So I believe that once the stocks actually better down, maybe a bit in, you can say, IT services, a little bit in pharma, some bit in consumer. So I think some of these sectors might attract some money, although one has to be very cognizant of the fact that valuations there are also not favorable. But at the same time, I think after a decent cut, even some of the cyclicals, they will actually come into, you can say, come into the light to buy again. But at the same time, I believe that the focus now should be much more on the companies which are having strong balance sheet and the wherewithal to face the current onslaught. So like maybe say a month or two, like you can say just you name the company and then the stock was rising. I think that is not going to be the case, whether it is consumer, whether it is, you can say, capital goods or any other defensives.
Fair enough, Amnish, that's the backdrop. Can you give some names? Because this is a highly complex market, even to trade from a short to medium term, right? It's not a one-way market anymore. So maybe 2-3 names that you're convinced of right now.
Okay, you see, one name we have been very positive about is RIL, because it's having a blend of telecom plus retail, but and it's going a bit into new energy. So one is RIL. The second name we are very positive about is M&M, because in PV it is a fastest growing company today, and even the tractors for them they are doing very well. And you can say the third stock if you want to look for is, I think, maybe in Bharti Airtel or Titan.
Okay, so RIL, Bharti, Titan and M&M, those would be some of the large cap names. Just a word, since you mentioned consumer, Amnish, there's the update that's come in from Godrej, right? So while they're saying their sales guidance and sales expectations are intact, maybe at the EBITDA level it could get challenging because of competitive pressures. What's your sense? We saw what happened to Dabur. What do you like here? What do you dislike? And what's the call on Godrej itself?
You see, if you look at Godrej or any other company, last year, all the consumer companies, particularly on the staple side, had seen very sharp uptick in their margins. And so now, once the volume and the value growth also comes, you will not see the margins expanding from these levels. In fact, I believe that for large number of companies, we might see some bit of margin correction happening in the current year. So given this backdrop, I think it is the profit growth might not be that high as the market was anticipating. So maybe now, maybe you can say prior to the rally which happened. I think what was your next part of the question?
Yeah, so what's the call on Godrej?
Yeah, you see, Godrej, we don't have a formal coverage on the name. But having said that, I think it is among the better ones when it comes to the growth in the entire sector.
Okay, all right, Amnish. Thank you for joining in today. We'll leave it there. Shorter chat, but quite helpful. Thanks for joining in. Need to take a very quick break. We'll come back. We'll have the pre-opening rates hitting us soon. And then, of course, we also connect with Prakash Diwan. And we will have Bejon Mishra, founder of Consumer Online Foundation, as the CCPA has issued that show cause notice to Ola Electric. What can shareholders expect now? Back with that in just a moment. All right, we are getting ready for what could be a very, very interesting start given the volatility in the Chinese markets. Let's quickly get to our technical experts and see how you should be positioned for trade. Today, we have Mitesh joining in and we have Sachidanand Utrekar with us this morning. Gentlemen, great to have you on. Mitesh, the bulls are really hoping that today is going to be that bounce back day. Will you play for some green today?
If I get a green, I might play for red the next day, So the idea is that the texture of the market appears to be changing. Yes, there is a good chance of a bounce back for two reasons. One, I think, we have had about 6 straight days of fall and the fall has been severe. So making the hourly and the 2-hourly charts hit the oversold levels. Also, we are now ambling around the lows, which was made before the final rally happened, which is, around the 6th and 7th of and 9th of September. We had a low of 24,750 and yesterday we closed just 30-40 points above that. So we are at a pivot level. I think a bounce back will definitely happen. But 25,200 and then 25,400 are the areas where I think a lot of supply would emerge. And in this current scenario, it will be difficult for me to imagine that the market will have the strength to get past 25,400. So anything close to 25,150, 200 is where I would want to start getting into short positions and add on as we kind of head towards, head slightly higher with a stop 50 points above 25,400.
Okay, all right, got that. What about Sachi? Good morning, Sachi. How would you approach trade? It's been a very, very sharp fall. For the time being, the GIFT 50 suggesting a flattish opening. How would you approach trade?
Good morning, Nigel. Nigel, I think market is due to end this particular corrective wave, and what we're expecting is that it has already reached the 5-month exponential moving average support, which is placed somewhere close to around 24,760. Now we have already seen that this particular support has acted as a supply zone, demand zone in the past, and that's why we are hoping that the 60-minute divergence which has occurred on the Nifty would form into a formidable bottom in today's session itself, and we may see a good a recovery towards 25,050 kind of a zone. So we are going long on this particular decline. We are expecting that there could be a termination in place, and we may see a very strong bottom in place somewhere within this particular area of 24,700 to 24,500.
Okay, I got that, gentlemen. Good morning, Mitesh. What would your trades be?
Yeah, I have a mix of buys and sells. On the buying side is Bajaj Finserv. If it gets about 15-20 points lower, let's say around 1855, Buy with a stop at 1822 for targets of 1920. A buy on BEL with a stop at 263 for targets of 280. And a sell on Canfin Home. Keep a stop at 841. Look for targets of 790. And ICICI GI is a sell with a stop at 2136 for targets of 2030.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, I think we can go across to Sneha Sheth as well, who is the derivative analyst at Angel One, who joins us. I'll tell you what, wait, before we go to Sneha, let's go across to Sachi and get done with some picks for the day. Sachi, fill us in with your picks.
Nigel, we are liking the setup of Tech Mahindra. If you look at the overall structure, the stock has been consolidating well near that 1600 mark. We have already seen a good long built up in yesterday's trading session, and there is a slight positive divergence even on its 30-minute scale. So we are anticipating a breakout here and a follow-through rally towards 1670. That's why we are recommending building long positions with a stop loss at 1590. The other stock on our radar is Tata Motors. After a sharp decline, the stock has been displaying some signs of support near its 200-day exponential moving average, which is placed at around 940. Consecutive doji formations plus a positive divergence and a short covering data in yesterday's session. We are expecting a quick move towards 985, and that's why you're recommending buying into its futures with a stop loss at 922.
Okay, all right, got it, gentlemen. Thanks very much. We'll come back to you for some more trading ideas a little later. But now let's go to Sneha Sheth, who is joining in from Angel One with some F&O ideas. Sneha, hi, morning. What are the trades you're working with today?
Very good morning. If we look at the selling pressure recently and F&O activity, wherein we are seeing decent short positions in index futures, and FIs also have been participating in this sell in this sell-off. So I believe until and unless we don't see an up move above 25, 100, 150, we would avoid any long bets for now. So I have a two sell call. First is L&T. Now, if you look at this stock, this has corrected recently, and the previous swing lows, which was placed around 3,520, it has even breached those levels. So I think we may see a follow-up selling at least towards 3394. So for the target of 3394, it's a sell, and the stop loss can be maintained around 3,510. Apart from this, PFC, which has corrected nearly 5% yesterday, looks poised for a further selling. So this counter is again a sell for the target of 417, and the stop loss can be maintained around 459.
Okay, Sneha, thank you very much for that. So those are some trades coming through. The pre-open 4 minutes in, if you can take a quick look at it, would have settled down. I think the opening rates were down about 80, 85 points on the Nifty, and it's down, I mean, absolutely flat, actually still changing, and could be even in the green, 10 points higher now. So 24,800 plus is where the Nifty is trading at this stage. You know, by the way, China is also picked up. The Shanghai market was up 3%. It's up 5% now. The Shenzhen is up 9%. So these are the mainland indices. Till about 10-15 minutes back, I mean, there was nothing major from that press conference. I think that press conference is still ongoing, so we'll have to wait for it to finish. But till about 15 minutes back, there was nothing in terms of policy specifics, especially on the fiscal side. So we'll see if that changes. But Ola is going to be in focus. The Central Consumer Protection Authority has issued a show-cause notice to Ola Electric following a wave of over 10,000 complaints received on the National Consumer Helpline. Prakash Diwan is with us on the program right now. We'll also have, one more analyst join us in just a bit. Prakash, good to have you with us here. Thanks very much for your time. Just your sort of perspective on this entire matter, and where do we go from here for Ola shareholders?
Good morning, Prashant. So I think it's finally Judgment Day of sorts. There have been lots of things in the making, in the pipeline, in terms of the whole disconcerted noises that you saw related to performance of this product. And there is always a challenge when a company that's not into vehicle manufacture gets into it, and very boldly. So they did a lot of things right in the beginning to launch themselves. But product quality, customer experience, redressal, these are things that need much more sustained effort at putting systems in place. remember, Ola is a very vertically integrated kind of a business model. They want to sell scooters, they want to make batteries, they want to make cells, so go backwards. They really don't have their own they've set up their own distribution. They don't have dealerships the conventional way. So it's a B2C kind of a model, and that always is fraught with the absence of the dealership, which is like a sounding board, starts sensing what's happening in terms of performance, gives feedback to the business owners. That has been missing. So somewhere this was bound to catch up. It's good it's happened in the early stage of the company's listed career at least. They could do some course correction and move on, but this is going to have some sort of an impact. Because remember, Prashant, the complaints, CCPA taking cognizance means there have been complaints, and complaints is a symptom. It's not something which will solve things. So the sales will get impacted eventually is what I meant. And that could probably be very, very disheartening for the business.
Social media, etc., a little bit in terms of the complaints, right? There seems to be just, there are maybe others as well. One is, of course, if you don't use the battery for an extended period of time, it kind of discharges. So then you need a replacement. There is, of course, things like, monsoons, rains were on in many parts of the country, so some damage there. Wires being, a lot of it is essentially replenishing and supply chain on the back end, parts, etc., not being available. But these can be fixed eventually, with a concerted push, concerted effort, right? So is this as you said, is this a phase? And of course, they'll have to respond to it. But just a quick word.
No, absolutely. I think there's a lot of work that needs to be done on the back end. As I said, they boldly started off a model which is different from what the rest of the business houses have been doing. So they'll have to tweak and adapt to the real life situation of meeting with customer expectation. And all of that would take time, which means if you bought Ola because it was number one in terms of electric two-wheelers, probably they might have to lose that position to somebody else for some time till they kind of get their act together. So it's all a question of course correction, which can take some time, and which means stock would also take some time to take a breather in terms of performance.
Okay, so I guess that is the issue. Now, till this resolves, and I think the company has 15 days, Prakash, to respond, and we don't know what are the further measures. Right now, there are no penal measures that the authorities have announced. But in terms of just sheer share price impact, what could we be potentially looking at as this resolves? And what would the advice be to investors who got in during the IPO height and perhaps bought at the peak?
Survi, good morning. So I don't know really what I can advise people who have bought it at higher levels, because naturally I think they bought it with the optimism and expectation of things looking up, the company building on its strength and market share advantage and all. But they'll have to, of course, consult their advisors to see how it fits into their overall portfolio in terms of ability to book losses and all that. But as I said, when I was answering Prashant's question on what does it take in terms of remediation, it's like a pharma company getting a EIR, and which takes time, right? So it's something like that. So they'll respond. They'll have to do some work at the back end. But the biggest damage to this is customer confidence and hence sales. So if you really ask me, the stock closer to the issue price, which was well priced from where it used to be at the time of the IPO, is where it will go back to, is my sense. It's quite close to that, to be honest. I don't know how it's opening up today, but all that froth that came in because of higher expectation and low liquidity, that is probably what's corrected. So it's gone back to fundamentals, and fundamentals do indicate that the offer price is probably a fair level at which you could have bought.
Just very quickly, 30 seconds left on the conversation. Very clearly, this overhang is going to continue on Ola for a while, and we'll see how they resolve it. In the meantime, if anyone's looking to take exposure to the whole EV theme, right, and we've seen how the incumbents have really marched ahead with very significant market share gains as well. Between TVS Motors and Bajaj Auto, what would be your pick?
So, if I had to weigh in only on the EV theme, it would have to be TVS, because the product is far more superior, well accepted, has already gone through the first few phases of acceptance. Bajaj is still kind of, trying to get the Chetak franchise accepted. And I think their focus will shift to the CNG bikes at some point in time to kind of, be the flag bearer of this, of green fuel kind of a vertical. So my sense is TVS is what will probably keep innovating. Of course, it's a premium segment that it caters to, very similar to Ather. But that's a segment that will take, much more cognizance of any improvement in product features and pay for it. So I would stick to that. But at this point in time, both the two-wheeler names have other issues related to their to their core businesses, which still are a bit of a doubt. So I would believe if you had to buy something on the basis of EV at some point in time, TVS would score a bit more. But whether I would buy it at this point in time or not is a bit of a doubt.
Got it. Prakash, thanks very much. Helpful conversation this morning. Have a good day. We look forward to connecting again soon. The pre-open is telling us that we'll start with about a 30-35 point gap, which probably the bulls will like, because when confidence has been damaged so badly, it takes a while for it to be built up. And if we get an opening like this, the question is going to be, can you gradually build on it? And whether sort of you get more momentum as the day progresses, and then that confidence comes back. I think we have Mitesh with us. Mitesh, very quickly, 9-10 call.
Yeah. I'll go with a buy on VEL for targets of 280.
Okay, all right. Thanks a lot for that. Mitesh, I'll tell you what should be. I think that the bulls actually would have want the market to start down. Because it gives you a chance to get in. Now, risk reward is not really, that attractive, though we could have a good day. I think today the buy on dips actually will be a better option because you wanted the 100-point downtick, Let's see how it goes. But Vivek joins us. Nomura has come out with a note on power sector and various companies. Vivek, run us through details.
Well, that's right. Another brokerage now jumps the bandwagon where they're extremely bullish as far as the entire power theme is concerned. So Nomura says that the Indian power sector is set for robust growth from strong demand growth. What is it that they're saying? They're saying demand at 7% CAGR over FY24 to FY30 compared to the previous high historical demand of just around 5% CAGR. So demand growth is something that they're seeing quite higher significantly. What are the opportunities? Solar module manufacturing, renewable energy generation, and T&D is where they see opportunities. Now, coming to the stock specific view as far as Nomura is concerned, Tata Power, they've initiated coverage. They have a buy rating. Target price is quite steep at close to 560 rupees a share. 2.5 times price to book valuation they're giving for the regulated equity business, and a much steeper 16 times EV to EBITDA is what is it that they're giving for the renewable part of the business. What is it that they like from Tata Power? What is it that they're expecting the company to deliver? EBITDA CAGR of 16% over FY24 to FY27, expecting the company to double its RE capacity to 10 gigawatt, and EPC business growth they are seeing quite robust from the current 15,700 crore order book that they enjoy. Now, coming to JSW Energy, here too they've gone ahead and initiated coverage. They have a buy rating. Target price is close to 885 rupees a share. The valuations at 15 times December 26 EV to EBITDA. They're expecting 38% EBITDA CAGR over FY24 to FY27, expecting a doubling of the RE generation capacity by FY27, and also likely to go ahead and achieve its 20 gigawatt RE capacity target ahead of schedule. So positive on Tata Power as well as JSW Energy.
All right. So that's essentially some of the stocks. Vivek, thanks very much for that. We've got the market open coming up on our screens. It's 25 points higher. It's slow, steady. It's calm. And it's not very excitable, which is good news. So slow and steady does it. Let's see. 24,828, 24,830 is where we are at. And the sensex is starting about 0.25% higher, 81,200 or so. Nifty Bank is up 0.4%, 50,662. Mid-cap index is starting about 1/3% lower for now. And that's something to watch out for, because broader markets, large caps, maybe, we see a bit of a reversal earlier. We don't know if that will be today, but I think that'll be first off the block. Broader markets, not so sure. 0.5% down on the mid-cap index. Now, watch that closely. We got the heat map, Nifty heat map up on your screen. I think you got about 25 down and about 22, 23, which are higher. So it's kind of evenly split. 16 lower now on the Nifty, a bit of a swing on the other side, but still flattish. Surabhi.
Okay, so we've got some red on the screen. Now the Nifty is down about 20 points. Let's see what the drags are. Tata Steel, Hindalco, the metal names basically, which have had a good run along with China. There's Tata Motors that's reacting quite poorly to those JLR numbers. Power Grid is lower. BPCL is down. Actually, BPCL brings me to other oil marketing companies as well. That would be on expected lines. HPCL, BPCL, IOC, all of them dealing with cuts of about 1%, so it's not too bad. Anyway, then there's some profit taking on IT, HCL Tech, TCS, Tech Mahindra. These are names on the way down. However, what is working for the bulls? Lever, 1.5% up. M&M, one of the picks that Amnish just described at PL. There's Ultratech Cement, Cipla. These are some gains. And the Bank Nifty. Let's see if the Bank Nifty can make a more decisive move. SBI, Axis Bank, ICICI Bank. There's some green here, but it's really flip-flopping at this point in time. By the way, watch out for Trent. Trent is up 0.5%. They keep disrupting the market. And Manglam was pointing out that they're now getting into lab-grown diamonds and trying to come out with very, very disruptive pricing as well. So let's see. That's an interesting stock in the news today. But absolutely at the flat line. Big battle between the bulls and the bears going on right now.
Well, that's right, Chirpi. A few stocks that are moving and, falling on high volumes. You have MTNL, that one's reeling under pressure. SBI has declared MTNL non-performing asset. So that one on very, very high volumes, that's lower. Suzlon is now down closer to around 5%. So that's a big downtake, actually, that we're seeing on Suzlon. So keep an eye out on that one as well, now down 4%. Jyoti Structures, volumes higher out there. Late last afternoon, Ashish Kosholia's name had appeared in the past quarter disclosure, so that could be one of the reasons. From the F&O frontline names, well, a few stocks that deserve special mention. The metal stocks, they're getting clobbered. Is China's recovery not as much as what the street was working with? Well, that could be a factor at play. NMDC and Nalco, both of them down 5 to around 6%. JSPL as well down close to around 2.5%, and Vedanta down 2.5%. Keep in mind, the index has rallied close to 10%. So that's coming for some profit taking. Later on in the show, we'll have a conversation going with Nalco. Two more stocks, HEG, they have gone ahead and they have picked up 8% stake in a larger competitor globally. For the time being, the stock had opened up in the green with a gain of around 2%. And High-Tech Pipes, they have launched that QIP. 600 crores is what they're looking to raise. We'll get both these managements for you here on CNBC-TV18 in the next 90 minutes or so. So keep an eye out on both those two counters. Prashant.
Well, it's quiet, and quiet is good. So approaching markets with some trepidation and some nervousness. So let's see if we're able to hold, or there is another wave of selling which comes. But a lot has happened last 5 days, very, very quickly. I mean, the classic sort of saying, right? Markets go up, taking the stairs, come down the escalator, and that's essentially what's happened very fast, and lots of FII selling. Now, just a quick broader market check, right? 2:1 declines to advances. So broader markets are still reeling under some amount of selling pressure. And maybe we can put out a few names. Sobha is down 3% on volumes. Viatec Vavag is down about 4% on decent size volumes. NBCC is at about 110 odd, 3.5% lower. I won't repeat the metal names which Nigel put out, but they are some of the big losers. Suzlon is down about 3.5%. It's by far the biggest volume-led cut. Stocks at about 68, 69 on Suzlon. So there is some amount of pressure coming through. And Shakti Pumps, I mean, there was a bonus which came through. Stock went up 10% in 2 days, but is back at about 4,200. In any case, I mean, it's one of the best performing stocks in a long time. On the upside, the biggest volume-led gainer, number one, is BSE. Bombay Stock Exchange is up 3.5%. On a very large volume. So what's this one? 39.70 or so on BSE. And, it's largely basically around the levels before the SEBI F&O restrictions came through, and, the announcement that each exchange can only have one contract on which it can offer weekly options expiry. So it's corrected a little bit. The high in the recent move was closer to about 4,300. Stocks at about 39.50 now. Paytm is reversing a little bit. It's up 3%, decent-sized moves. So these are stocks where there has been interest and they got sold with the market. Paytm 673 or so. Mahindra & Mahindra, I think we had a technical call from one of our analysts, 1% higher. It's got decent-sized volumes. Amber is up 2%. PG Electroplast, big climb down recently. High was about 694. And of course, yesterday it fell to about 530. It's coming back to about 560 now. That's a 4% pop. So you'll see lots of this, stocks which have been sold, clawing back a little bit here and there. So That's the overall market picture.
Well, I think the one positive is the Nifty Bank is showing signs that it wants to fight back. Last half hour yesterday, the index itself was moving 1,000 points. In the positive, it recovered 1,000 points, and then in fact it ended with a cut of around 1,000 points odd. That's showing some fight. So keep an eye out on the Nifty Bank. That needs to bounce from these levels to get a sustainable bounce. And the Nifty Financial Services Index also plays out the weekly expiry today. The other index is the Nifty IT Index. That's been holding one end up. For starters, that's opened up mildly in the red, I think. So it's down close to around 0.5% odd. And that's been the go-to segment of the market as well. So we'll have to see whether or not that can bounce. I think the ingredients are in place for a bit of a bounce today. For the time being, we're consolidating, which is not such a bad outcome after the kind of selling we've been seeing on a day-to-day basis.
I mean, banks can bounce or Reliance can bounce. Reliance is the other one, which has fallen quite a bit. I mean, that single-handedly could sort of do it for the market as well. At least at the margin. It's already starting to recover, RIL. I mean, I think yesterday's low on Reliance was about 27.20. And of course, it's fallen from about 3,200 kind of levels. Today's low is 27.30. It's recovered about 10 bucks, 10-15 rupees from the day's lowest point. So this is the other one. Well, let's welcome in Sandeep Bhatia. He's our market master of the day, Managing Director and Head of Equity India at Macquarie Capital. Sandeep, good to have you with us here. Thank you for your time. A lot of FI selling last 5-6 days, Sandeep. Let's just get a quick sense from you on that. Do you think most of it is done? And presumably this is all, as we've heard from many others we've spoken with, to fund what's been going on in China, which was like a lot of shock and FOMO, in a positive way. But do you think a lot of it is done?
So I think Indian market will definitely face continued headwinds at least till end of this month and possibly in November too. I think there's definitely a good bit of valuation correction that the market needs from here on. So yeah, I think China is just one reason why India will see some outflows from FIIs. But the underlying reason is the fact that valuations had got to levels where definitely they cannot be justified, especially in the small and medium cap space. So this correction is actually, I think, healthy and welcome.
Sandeep, just give us a color on what kind of this selling that we've seen from FIs. Is it a lot of long only? Is it fast money, hedge funds? I mean, just give us a sense.
Both are selling. Hedge funds are also selling, and so is long only.
But at the levels, is it predominantly one or the other?
Well, it depends on a single day that you are looking at. I think initially the hedge funds are the first to move, but the long onlys follow. That's how the way it is. So I don't think we should at this stage and at these levels in the market, FIs will sell across the board. It's too premature to say that one will sell more than the others. It's just a short-term thing that you may see someone selling more than the others. But yeah, there is definitely a good money made in India, and there's profit booking, plus there's overvaluation, so corrections need to happen. All that is happening. In fact, the spate of IPOs and the spate of promoter sellings which we are seeing was clearly indicating that the market was overvalued. If the person who's running the business and owning the business thinks that it's overvalued, then definitely it's overvalued.
Just one, just to finish the point, Sandeep. So the indication you're saying you're getting, and you'd be dealing with most FIIs, is that they're more inclined to sell more at the margin, incrementally.
At the margin, there definitely would be sellers, and they need to fund the IPO pipeline. That even if they are not taking money out, they would still need to fund the IPO pipeline, which India is offering them. So I'm not saying that people have lost interest in India or the IPOs are not going to get subscribed. I think all that will also happen. But it's not that more money can continue to pour into India regardless of anything else, regardless of China's performance, regardless of valuations in India. No, that is not the case. So I think there is definitely a rebalancing and cash flow management that's happening.
Sandeep, great to have you on. Really interesting times, right? In the last couple of weeks. And they say in the market, the only risk is the one that you haven't factored in, or the one that is unknown. And that's exactly what played out, because no one was anticipating this level of FBI selling and what that could do to the market. So, okay, let's talk about, the issues at play here. FPIs did not sell when capital gains tax was hiked. They did not sell when there was volatility on the election front. But they chose to sell. The trigger was this big move in China. Now, if the China rebound doesn't play out and if it ends up being another bear market rally, I know that's a big if right now that we're working with, given the morning announcements as well, then what happens? Then does it go back to BAU for India? So in theory, then does it remain a buy on dips market, which is what we've seen since COVID?
So I think good question. So let me just give you a bit of a context. When you had MSCI India weight in the MSCI, which is the index which most FIIs would look at, equal to or even slightly moderately higher than China, that was clearly a big trigger. There's no way the Indian GDP or the Indian economy is as large or as diverse as the Chinese GDP, as China's economy. So clearly the market was quite richly valued. On the other hand, China has been extremely, in the doghouse, and it's been coming off for a couple of years now. So is this a trading rally for China, or is this something which can have longer legs? Macquarie view is that China will not be a structural growth driver for the global economy that it has been for the last 20 years. But definitely there is a case for a trading rally, and that trading rally can last for a couple of months, right? It can last, after the presidential elections, it can last up to the beginning of next year. So I think October, November, December would be a good time for a trading rally in China. And therefore, to some extent, there will be profit booking and money, getting off the table in India as far as FIIs are concerned. But if the China rally fades, which I think most likely it would, because the geopolitics between the US-China is still very negative. Whoever wins the presidential election in the US, definitely there will be trade barriers and tariff barriers erected. And I don't think even Europe or India are necessarily welcoming Chinese imports. So all said and done, this rally in China would definitely fade in the next year. In that event, India has much longer legs. Macquarie believes that India will continue to do well, and in fact, Macquarie believes that US, Japan, and India are the three big structural markets of the world. So that's where we will be, but that may take some more time.
Just to clarify, you're saying the trading rally in China that could continue till the end of the year, right? Till about November, December.
Yeah, yes. Once the new administration is in place, once their policies
in the
are
US,
once the policy and tariff barriers are unveiled, then the issues on China's growth will come to the forefront, which are not right now. And anyway, a lot of this money is coming from within China. This trading rally is also fueled by retail Chinese investors. So if we have retail Indian investors, we have to remember that there's similar or bigger Chinese retail markets. So all of them which have been inactive, I'm told. There are various photographs going around that, during the Golden Week, during the holiday period that just ended in China, everyone was reopening their brokerage accounts in China. So clearly that's what's happening.
All right. Hi, Sandeep. Just coming back to you, but I just want to focus on one stock, DLF. That stock has spiked to the high point of the day. I think the street is taking note of the outcome of the Haryana elections. And sometimes, in fact, you do see that, sometimes it's trying to extrapolate that maybe, in fact, the government that comes in could be more favorable for this. That's at least the thought process. So explains why that stock is up close to around 1%. That's market's way of seeing things. Sandeep, I wanted to ask you about the state elections. The markets took the general elections in its stride. We got a coalition government with Prime Minister Narendra Modi at the head. So they digested that. They said policy continuity will continue. Now the problem is various states, appear to be going against the ruling NDA. Whether it's Haryana, whether it's, the street is bracing for Maharashtra election outcome as well. How important are the state elections from a market perspective?
State elections are important. They give an indication of where the political mood is going, and therefore I think definitely the state elections in Maharashtra, which the dates have still to be announced. Then there is of course, the Bombay Municipal Corporation state elections, which will happen. And then there would be next year the Delhi state elections. So we have a slew of elections. As I always tell investors, India is always in the election mode. So if you think that the general elections are over, then that doesn't mean anything. We'll have the state elections come through, which are quite important. So to answer your question, yes, state elections are important, but more from what it gives a political message to the ruling party. I think the political message which the ruling party got was that the prosperity that has come through should be more widespread, and therefore I think we see the announcement of more fiscal spending and consumption stimulus, which is happening. I think these state elections will reinforce that message for the BJP, and to that extent, I would definitely think that we will see more competitive welfareism come into play for the next budget.
All right, Mr. Bhatia, thanks a lot for joining in and giving us your take on the markets and how you see things shape up as well. For the time being, the markets have seen a bit of a recovery. The Nifty up close to around 40 points, 30, 40 points, but it's very, very swift out there. We're back down to around a 20-point gain. Let's focus on Nalco. Today, the stock is under pressure, but otherwise, the Chinese stimulus announcements, well, it got the metal stocks very, very excited. In fact, Kotak is bullish on Nalco, given its attractive risk-reward as well as the valuations. To help us out with how business is shaping up on ground, we're joined by Mr. Sridhar Patra, the Chairman and Managing Director of Nalco. Hi, Mr. Patra. Good morning and good to see you in. Thanks a lot for speaking to us here on CNBC-TV18. Aluminium prices have seen a good bounce. They're holding around that $2,600 a ton. Could you tell us what kind of a price band we should work with for aluminium prices from here on? And also alumina, normally the derivation is as a percentage of aluminium prices. And last recorded, I think it was around 19-20%, which is higher than averages. What's the latest price that you have on your alumina sales?
Good morning.
Morning.
Let me tell alumina and aluminium. The pricing is basically based on a different mechanism. If you see the alumina price at present, the last spot what we have made, we have reached beyond 600. The basic reason is alumina price is depending upon the supply and demand forces. And Alcoa plant had production stoppage 2.2 million tons. And Rio Tinto Alcan also made production curtailment for making some changes in their plant. Hurricane Beryl also affected. So these are the temporary impact, but I feel this increasing price trend now at present, it is around 23%, 20-23% of the aluminum price, which is coming, it will continue. I foresee that this price trend will continue so far alumina is concerned during this 2024. And the metal price, if you will see, 2611, it was the highest in this financial year, which is on 30th September 2024. But this price, as per the market analysis, is highly expensive and it will come down. And that has happened. On an average, if you see 2024 aluminum price, it is 2451 till 30th September.
Okay.
And the market analysis anticipate between 2,300 to 2,400, it will safely move within this range. And I believe it will move in this range. And at present, the alumina price, if you consider 2,400 on an average as the aluminum price, comes around 21-22%. And this trend, I foresee it will continue for 2024.
Interesting, Mr. Patra. So you're expecting that aluminium prices will hover around $2,300 to $2,400 a ton, while alumina could hover in this vicinity of around 550. Should that be a ballpark number, $550 to $600 per ton?
Alumina price last spot tender we made it is above 600.
Correct.
And I am expecting that this price will remain because the temporary factors like Alcoa plant interruption, Rio Tinto curtailment of production, Hurricane Beryl, because these are affect the market for temporary period. So to make correction, also I again say that it will take 4 to 5 months. So I believe strongly during 2024, my alumina realization will be good and it will be in this range only.
Now, I'm just reconfirming that $600, sir, because if it's aluminum price is going to be $2,400 on an average, then 600 would be close to 25%, alumina as a percentage. But as you said, because there's a deficit situation, that's why you're expecting alumina prices to stay elevated for the next 5 months or so. Could you give us that number, the alumina deficit in the near term? Kotak is believing that it's around 500,000. Would that be a fair estimate?
Alumina deficiency is expected by 1 million ton.
1 million.
And metal surplus is expected by 0.5 million ton. As such, around 1.92 million ton of alumina is required for 1 ton of metal. So this deficiency of alumina and the surplus expected of aluminium will get compensated. And next year we'll be getting a better picture. So there is no surplus of metal, no surplus of alumina.
Okay, so right now we have less of the metal going around than needed and less of alumina than needed, and there is this deficit situation, a slight gap that we're dealing with. But sir, that would perhaps put you in a sweet spot, right? Because you're also ramping up your alumina capacity. So given what you just described on price trends, both for aluminium and alumina and your capex, what should we work with in terms of FY25? How much of this capacity comes on stream this year? What about next year? And just give us some projections for the current year, given the market conditions that you described.
You see, the smelter capacity expansion cannot be made just by 1,50,000 or 2 lakh tons. Minimum capacity for smelter expansion, it is 0.5 million, otherwise it will not be economically feasible. So it is never expected that smelter capacity from 0.46 million ton to it will go 0.56. 0.462 we are planning to go by another 0.5 million, so it will be around 1 million ton. And refinery expansion, the fifth stream refinery expansion by 1 million ton, which is expected to be commissioned by September 2025. And if it is commissioned by September 2025, almost half of the 25-26 financial year will be getting additional aluminum. So I feel 0.5 million ton extra production of alumina you can envisage in 25-26. At present, we are doing around 2.1 million. So by 25-26, it will be around 2.6, and thereafter it will be 3.1. And metal production, we are ramping up. Our capacity was installed capacity 460,000 tons. Now this year, we have taken permission from the State Pollution Control Board to increase the production with the same pollution load. So we'll go up to 480,000.
Sir, so can you just tell us what is the capex with this kind of ramp up that you described over, FY25 and over 26? What is the amount of money that you're spending? What is the total capex and how much is, allocated for this year, 25, and how much in the next year, 26?
You see, for this current year, we have kept 2,000 crores capex, and that includes both the expansion of fifth stream refinery as well as modification and replacement of the existing asset of the existing operational plant. And next year also, we are expecting the capex of similar volume of 2,000 to 2,500 crores.
Sir, since you're describing the expansion that you're undergoing, and we've already discussed what the market pricing conditions are and how you're expecting alumina to sustain around $600 given the tightness. I'm just reading out some projections that Nigel shared. I mean, this is one of the brokerages on the street. Kotak is saying your EBITDA should rise by 8% in FY25, by 11% next year, and by 17% in FY27 as a lot of this capacity comes on stream. Are these fair assumptions to have, expectations on the EBITDA increase? 8% this year and 11% next year?
I am always optimistic that we are the lowest cost producer of alumina and bauxite. So if the same cost remains, then definitely we will perform better than the market expectation. And again, I am telling our caustic soda plant with GSL, that also started operating at 90% capacity this year. It is likely to operate at 100%. So once it is operating at 100%, that profit margin also will come to us. Whatever caustic soda we are procuring from them, being a JV partner, that profit margin also will come apart from raw material security. So I am quite optimistic that will be performing better than the market expectation.
Okay, got it. Just a quick word, since you have 2,500 crores of capex lined up, you're sitting on a good amount of cash. So all this capex will be via cash as well as the operating cash flows that you generate. No debt is what you'll take on?
You see, the capex target, what we are keeping, so far resources concerned, we don't have any constraint. Because it is a zero debt company, we are expecting based on the cash outgo. If the fifth stream refinery is commissioned, basically 20% retention money, all this money which will be paid after the plant is commissioned and the trial run is made successful. So I am quite hopeful this is just a expectation that this will be around this. Even if it increases, we don't have any resource constraint, we can go ahead.
Just to confirm, you will continue to remain a net cash company despite this big capex plan, right?
Yeah.
Got it. Let's talk about you focusing on the cost side. And the street is quite excited because one coal mine started ramping up and giving you coal. Now the other coal mine as well is ramping up. So I think your total requirement is around 6.5 to 7 million tons. How much of that requirement will come in for captive sources? And what could the savings be in FY25 and then in FY26?
If you see the coal, Utkal D has been made operational. And last year we achieved 2 million ton. Current year by September, 2 million ton we have achieved. And the consolidation of Utkal D and E is under process. I am quite hopeful that within a month or two, we'll get all the statutory formalities completed. So we will go beyond 2 million ton this year coal, and next year I am confident we will go beyond 4 million ton. And at present, the company is getting a benefit of around 350 to 400 crores due to operationalization of our own coal block. And another aspect I will tell, whatever the cost difference we think between my e-auction coal and the cost of production, that I am showing as a gain. But the indirect benefit what I get, I am assured not to purchase any power. The power what we purchase during the rainy season, etc., it is an excessive price.
Okay.
So that also will give a savings, will not purchase power. And coal security, non-purchase of power, and which will ultimately reduce the average cost of coal. So in that way, I will be much beneficial once it is made 4 million tons. And there is a provision that up to 40% we can go up, ramp up our production. So once we achieve 4 million ton also, we can ramp up to 5.6. So the profit will be multiplied and the company will not look back.
And this number of 350 to 400 crores is based on getting 4 million tons, right? This savings of 354.
400 crores we are getting at present from 2 million ton.
From 2 million tons. Okay, so when you go to 4 million tons, it will be close to around 800 crores.
Exactly may not be 800 crores, but it will be beyond 600 to 700 crores.
Got it. All right. Thanks a lot, Mr. Patra, for joining in, giving us your take on business. You seem to be confident. We look at the delivery from here on. But clearly, pricing in your favor, costing as well is something that you're focused on. But by the way, the bottom of your screen, that's the big headline. BJP has taken a lead. It's ahead in Haryana.
This is as dramatic as it gets. I mean, the exit polls were indicating 60. Actually, some were saying on the higher end, 60 seats to the Congress. And the difference actually now, some of the some channels are actually putting BJP ahead in terms of the counting, which is still going on. It's still early. These are still leads which are coming through. But this is a nail biter if there was ever one, right? I mean, actually, when we started, it was, we put that flash out saying that Congress has passed the halfway mark in terms of leads. That was 30 minutes back. And now, as you and I think in the next 30, 40 minutes, it should be clear. But if these are the results which hold, I think this is a dramatic improvement from, of course, the pre-exit poll from before when the voting, because Congress was expected to do, a lot better, especially after the general election results. Haryana anyway was looking like a little bit where the BJP was on the back foot. But now look at this. BJP is now ahead and the Congress is behind as those leads continue to come in. So I think, dramatic turn of events. Let's just look at the market as well, which I think is responding. The market is up 40 points now on the Nifty. So 24,840. I mean, never a dull moment. Yeah. There is, of course, all that with China. Who was even thinking about Haryana with the exit polls and what they were giving the ruling party? Most had kind of written off and they were looking ahead to Maharashtra, which of course is the big state. But this certainly does throw up a big surprise. And I think the market is reacting to whatever is happening, in China, etc. But I think it's now starting to take note what's happening in Haryana as well. So 24,850, we're up about 55, 60 points. This is a bounce which is starting to develop in the real sense. I think Bank Nifty continues to hold with about 0.8, 0.9% gains. But there are other non-banks which are starting to fire as well. Reliance, for one, from the lows has picked up about 25 rupees. So that's about 0.5%. That's a heavyweight. And, we'll see if there is more steam which starts to come in through. We'll take a quick commercial break here. We've got, by the way, a political discussion lined up a little later. But before we do that, we'll have the eye on earnings, right? IT services first off the block. So QSQT, quarter se quarter tak. Rima sets up the context for us. And we'll have Kawaljit Saluja of Kotak talking to us about what to expect from the IT services pack. Stay with us.
Welcome back. You're with us on Corporate Trader. It's all happening here. The market's bouncing back, reacting to those result leads that we're getting in from Haryana. With this going down to the wire, a close neck-to-neck competition between the Congress and the BJP. By the way, just before we start our discussion on IT, look at the move on some of the other stocks beyond banks. Look at Ultratech Cement. Look at something like Adani Ports. Sharp moves. L&T. Quite a few names, aside of course, all the banking names that are leading the market up move right now. 70-point move on the Nifty. So plenty to contend with China elections and the fact that we're getting into results season very, very soon. So it's time to kick off our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Rima is joining in to put the spotlight on how the second quarter would have perhaps panned out for IT companies. Let's get the curtain raiser going. Over to you, Rima.
Thanks so much for that. So let me start with how the quarter was for the IT stocks and the way the Nifty IT index has outperformed. The Nifty IT index is up 16% in the July to September quarter. And from the beginning of June, it's up close to about 30%, significantly outperforming the benchmark indices. The outperformance was driven by investors increasing their positioning in the sector after 2 years of earnings downgrade cycle on the hope that the IT sector has bottomed out and is on the cusp of a recovery. Now, IT stocks are trading at a premium to their last 5 years average. But then remember, so are most of the sectors in the market. Now, moving on, the question in this quarter's earnings season is, will the numbers match up to the narrative that, in Q2, things are going to be stable, and going forward, the earnings growth is going to recover, particularly in FY26. Now, this quarter, we're expecting Q2 earnings to be similar to Q1, or maybe slightly better, with the financial services vertical, but more so in North America, recovering. Infy is likely to lead with about a 3% revenue growth on a quarter-on-quarter basis. Margins across the board are likely to be stable. One, there is INR depreciation, so that will provide the boost. And also, there is no big impact of wage hike. For TCS, it took place in Q1, but for most of the others, like LTI, Mindtree, Infosys, HCL Tech Mahindra, the wage hike kicks in only in the subsequent quarter. Managements are likely to continue to sound cautious around discretionary spend. So the key to watch will be, will Infosys go ahead and up the FY25 guidance, which stands at 1 to 3%? Now, there is scope, considering that in Q1, Infy's revenue growth was 3.6%, and in the current quarter, we're expecting a growth of about 3%. Many brokerages believe that Infy is likely to go ahead and up the guidance. So whether it's Kotak, Citi, Morgan Stanley, they're all baking in a guidance increase, and this is what the numbers look like. HCL Tech, though, on the other hand, is likely to keep their guidance unchanged, so 3 to 5% on revenues, margins at 18 to 19%, and Wipro, which gives you a quarterly guidance, for Q3, it's likely to be between minus 0.5% to 1.5%. So to round this up, Q2 is likely to be stable, but the question is, will growth accelerate in the second half of the year? Are we poised for a strong FY26? Do margins expand in FY26 as consensus believes? Will 2025 budgets show an uptick in spending, given that interest rates in the US have, we've already started seeing the rate cutting cycle there? Are hiring trends improving? Will earnings recover in the next 12 months? Well, that's the expectation. And the question this time is, will the numbers and narrative meet that? Back to you.
All right, Rima, thank you very much. Indeed, that's the question. Will the commentary and real hard numbers meet the surge that we've already seen in stock prices? To talk about this, we have Kanwaljit Saluja, ED and Head of Research at Kotak Institutional Equities, joining in. Actually, Kanwaljit and his team are in the camp that is, in fact, expecting Infosys to go ahead and hike the full year guidance. Kanwaljit, great to have you on the call this morning. Thanks for joining in. So tell us, I was looking at the Infosys stock price just now, but while the expectation is on the guidance increase, look at the rally. It's tremendous. The stock is up 40%, near 40% from the June lows. So you're also sort of walking in with very tall expectations. The company has to deliver, right? Do you think they can?
Yeah, we do actually believe that the numbers would be consistent with where the street expectations are. We do expect increase in their revenue growth guidance to 4 to 5% from 3 to 4% right now, or as of now. Of course, the stock has rallied, but the way to look at it, the stock was terribly undervalued 3 months back. Now it's getting more in sync with the true potential of the business here. So yeah, we expect the numbers to meet the expectations which the street has.
No, absolutely. I take your point. And the stocks, IT sector, Infosys included, they've all been rallying for all other tactical reasons as well, the shift in money, etc. But let's talk about the demand recovery. And I think you're expecting a bit of improvement on margins as well. Is this going to be the real deal, like a durable pickup in spending in key markets like the US? And then what would be a sustained rate of growth that you will pencil in? I think that's a bigger question that people are asking. How much will the street be willing to pay for, let's say, 7-8% growth? Is that the best case scenario on a durable basis?
Okay. The first question you asked is on demand recovery. Look, right now, the current situation of demand is quite mixed. There is improvement in demand in US financial services, but not so much in Europe. At the same time, there is deterioration in retail vertical, there is deterioration in manufacturing. So the net result would vary across companies, and that's where you'll get divergent growth rates. The critical question is that what happens to calendar year 25 budgets? For now, we are building in an improvement in demand, in which we are building in a 7 to 8% growth rate for large companies. For certain mid-tier companies, we are expecting low to mid-teens revenue growth rate. The question is that, do we have the visibility right now for those numbers? The answer is no. I think that visibility would build as the budgeting exercise gets completed at the beginning of calendar year 25, or rather actually towards the end of this calendar year. That's where you'll get the visibility for acceleration in demand. But the setup is something which is a little bit encouraging, and that forms the basis of our assumption for FY 2026 as such.
Kanwaljit, hi, good morning, and good to see you back on the program. It's been a while. Just a quick word on whether these rallies will be transitory or they're going to be durable. Stock rallies across the board. Because, when we speak with IT companies, the biggest talking point has been US and AI. But again, there's no clear sense of where, right? Everybody for the last 2 years has been waiting for a US recession. Now, the last jobs data shows that labor market is still strong, and they've cut by 50 basis points. So it's like, you're hanging there without really knowing which way. I suspect that commentary will not be very much changed this time. Just your thoughts.
Now, of course, commentary will not change. You'll get the normal platitudes and normal commentary, which is that there are some green shoots. The U.S. election uncertainty is going to end. There might be something which might be mentioned on interest rates. But I don't think anyone will comment on calendar year 25. And then you'll have to contend with the furloughs of the December quarter as such. So coming to your original question of can the rally sustain in the stock prices, the answer is that many of the stocks are trading far, far ahead of the real fundamental underlying value, which is where, if you look at the overall IT sector, it is slim pickings here. It's not as if this sector is buzzing with many ideas. It's slim pickings, which is where we have, 3 or 4 names that we are pushing in a wide coverage of 16 names.
Yeah, as they say, right? Fish where the fish are. As you say, not very many fish here in that sense. Kawaljeet, since we have you, when just a broader question on flows, and Kotak, of course, deals with most foreign investors. With what we've been seeing over the last couple of last 4 or 5 days of FII selling, Kawaljeet, give us some color. What is the indication you're sort of getting from clients on the other side? FIIs, long onlys, hedge funds. Is there more coming, selling at higher levels? If there are bounces, will those be sold?
Prashant, I would have loved to give you plenty of insights on that, but the strategy part is covered by my colleague and my boss. I think definitely you should ask him this question.
No, we definitely will. But to get back to IT, like you said, right, that the stocks are already trading far ahead of fundamentals. 7 to 9% is the kind of single-digit growth we're still working with. But the market can keep doing strange things. Now, number one, if the companies don't come up with sort of very lively commentary, is there a possibility of a near-term fall in prices? And more importantly, you said that you're only liking a handful of 4 to 5 stocks in an otherwise large universe. So talk about who the outliers could be, because the market's willing to pay top dollar for growth. So maybe not tier 1, but tier 2, tier 3. What are the businesses you think that could deliver on that expectation?
So our framework is a straightforward one. Companies that will directly benefit from at least early signs of demand recovery. The demand recovery in financial services is essentially in capital markets. It is in banks that have been pulled up by regulators, so they're spending a lot on risk and compliance, and regional banks. In addition, there are some smaller segments in financial services that are also shown promise. The companies that benefit from the current state of demand recovery right now are Infosys, it is LTIMindtree, Coforge. So these are our top 3 picks as such. So it's a very straightforward exercise, at least for us here.
And just very quickly, 30 seconds, we didn't mention TCS at all in the conversation. Why are you expecting sluggishness there?
It's a little bit of a surprise. The demand, we are expecting a 1% growth rate, which is fairly muted. Ideally, the company should have benefited a lot given their high financial services exposure. But then I guess, there might be some weakness in Europe. At least that's what our base case is, which is where, you might get numbers which are a little bit sluggish.
Okay, all right. Kawaljeet, thank you very much for that. So appreciate you joining in, and hope to speak with you post the earnings season. Well, the dramatic seesaw in Haryana with the votes being counted today. Shivani is joining in from the Congress headquarters in Delhi. Shivani, I'm assuming that the mood is completely flipped, like the results which are coming in seem to have flipped.
Well, it has, Prashant. Just 5 to 10 minutes ago, the thing that you're seeing behind me was full of people with drum rolls distributing sweets. But now the mood has suddenly, as you said, flipped because of what has happened in the counting. The early trends showed that Congress was way ahead of BJP in at least crossing the halfway mark as well. But now the BJP has flipped it. So it is a neck on neck. It's almost nail biting. But as you can see, as I told you, the mood has completely changed here at the AICC headquarters in New Delhi. 90 seats up for grabs, and right now the trends at 940, 942 showed us that it is a close call between BJP and Congress. Of course, the rest of the parties which were in the fray are nowhere to be seen in the competition, like the JJP, INLD, and the Aam Aadmi Party as well, which was supposed to be a strong contender in Haryana this time. So it is a poll between the BJP and the Congress party. The mood, as I told you, has flipped a little in Congress, in the Congress headquarters, but it is a long day to go now. It's just 10 o'clock, and we are expecting some more trends to come by. If we go by the exit poll results, Congress was seen taking a lead, and if Congress comes back to power, it will be after a full decade. People are expecting that Bhupinder Singh Hooda will be the chief minister face from the Congress party, and from the BJP, of course, the incumbent chief minister Naib Singh Saini is one of the top contenders. As you can hear, the drum rolls have started again, so I'm assuming that the trends are flipping again. So clearly a lot of enthusiasm here at the Congress headquarters, and so as is the case in the BJP headquarters. We were there 5 minutes ago, and both the parties are saying that they are going to be victorious in the important Haryana elections. We'll have to wait and watch for how the day goes and how the trends keep flipping, but at the moment it's clearly nail-biting, and it's between only two parties, BJP and the Congress. Back to you, Prashant.
Absolutely. I mean, the numbers are still pouring in, but you got, yeah, I mean, the JNK numbers are the top of the screen, and Haryana also right there. Sanjeev Srivastava is with us, who's a political analyst. Sanjeev, good to have you with us here. I mean, this is as dramatic a turn as we've seen in some time. I mean, I think you'll have to go back all the way to that Bihar election many years ago.
Maybe. It'll be nothing short of a miracle of kinds if the BJP takes Haryana again, because it goes against the popular understanding, perception, but then these things have gone wrong many times before. Also the exit polls, but exit polls have also gone wrong many times before. But just the law of averages after 10 years of rule, Haryana is not a Gujarat. So I would be still surprised if BJP takes the state. But clearly, the very fact that they've made it such a close contest till 10 a.m., one has to give credit to BJP for really fighting it out and slugging it out there in the open. So good for them.
Because I mean, I think it was kind of the Congress was basically in all before even the elections they were celebrating. I mean, it was like a foregone. At least that's what you could make out, that this is in the bag. And of course, the BJP obviously has worked and put their head down and worked right on the ground. Even if whatever the results finally come through, but this is very, very close in that sense.
Full credit to BJP for that. See, everybody was expecting them to lose. The very fact that even the Prime Minister, who did 10 rallies last time around, did 4 this time, the feedback even to the BJP top leadership was that it's a tough election for them, which they might not be able to take. So there is still time before the final results pour in. But the fact that they've made it a close contest, the fact that they have pushed the Congress at this time of the day, and the ultimate final tally will also be close. Like I've been repeating, full marks to BJP for getting it so close. But I still expect Congress to win.
Yeah, this is going to go down to the wire until the last vote is counted. One of those cliffhangers. Get that point. But Mr. Srivastava, the question is that will it really move the needle and have any larger bearing? I mean, we're also looking at critical elections. Of course, JNK, we're seeing that was pretty much a clear one, that it will not be obviously going the BJP's way at all. Then you're running into Maharashtra, which is the next big state. So how should we read the Haryana result, even if, for a moment, if you assume, even if it goes the BJP way, what changes?
See, on the national politics, really, even if the BJP loses Maharashtra, nothing much changes, except for the fact that the Prime Minister becomes a little weaker, the macho image takes a bit of a setback, which it has already done post the Lok Sabha elections. But I think paradoxically, the more states a coalition government loses, the government actually becomes more strong or more stable, because then there are two coalition allies, Nitish and Chandrababu Naidu, and they can flex their muscle more, get better deals for themselves, and the government has little choice but to concede. So the government stability, I don't think really is a function vis-a-vis these state elections. Yes, it's bad for their overall optics and image and the strongman.
No, Mr. Srivastava. No, I was not actually talking about government stability at the center at all. I mean, my question was more about policies and any changes in mindset. But actually, we also have Ninad Seth, senior journalist, joining in. So let me put that to him as well. Mr. Seth, so that's really the question, that even whatever happens for the BJP here, I mean, let's assume both scenarios, that they somehow manage to win these two key states, Haryana and Maharashtra. That's a big presumption. I'm just trying to understand from a policy perspective what changes. And the converse, if they lose some of these key states, then do you expect more populism? Then do you expect a change in track at all?
I think that, first of all, it's very surprising, what is happening in Haryana. I traveled a little bit in the state. I was expecting a little bit of a sweep from the Congress. I think in policy, a lot will depend on the victories. It does strengthen the centre's hand if they win those two states. But, at the minute, even with the lead that we are seeing in Haryana, it is looking unlikely to me. I have a feeling that there will be policy caution. I have a feeling that there will be rethink on spending on, welfare and freebies. I personally think that the last general election set the tone for competitive freebies already. So, can we then expect the continued fiscal consolidation that we have so far seen and has to be appreciated? That will probably be opening up. But on the other hand, if the 5-year term is guaranteed, which more or less looks stable, and then perhaps, it could be business as usual, despite these two results, whichever way they move.
Mr. Sheth, I think in Haryana, the government it was handing out 6,000 rupees to families in terms of those handouts, right? The Congress, I remember early on was saying that we're going to increase it substantially if you vote us in. And if these results hold, I mean, then actually isn't the implication, is the implication as you're describing that we'll only see more and more freebies and handouts?
See, Haryana is a relatively prosperous state. In Haryana, the problem is not, so much prosperity, but jobs. Job security and jobs in the family, because a lot of agricultural business or small business does happen there. So maybe Haryana, the freebie effect may not be as pronounced as in the rest of India, especially in Maharashtra, where there is already, if you look at the campaigning or build up to the campaign, BJP itself is leading the way in that particular direction.
Yeah, no, that 1,500 rupees per month to women. That's, of course, come through. Just a quick word on what does this mean. Maharashtra is the bigger state, much more closely watched. If the BJP were to sort of get Haryana, does it sort of charge up the cadre here in Maharashtra for the BJP? I mean, and does it in any significant way influence elections, your sense? Sanjeev?
If BJP takes Haryana, it will be a big surprise and a huge fillip for the government, the central leadership of the BJP, and what one is expecting that Maharashtra, they are going to lose. The Maharashtra election will become a completely open one, because people expected them to lose Haryana and they've won it. So Maharashtra becomes an open election. Conversely, the significance of Maharashtra from other aspects is that if BJP loses Maharashtra, they lose also Mumbai, Hyderabad, they don't already have, Bangalore. So 3 major cities and metropolis which are very big financial heft goes out of their domain.
Absolutely. So it's a big one in terms of just sort of signaling impact and in that sense. We'll watch this one. The last. Sorry.
The real big one would be if BJP takes Haryana.
That's what I'm saying.
Mother of all surprises.
Yeah. Now, and I think, as I said, in terms of parallels, we'll have to go back to that Bihar state election, maybe for just the dramatic effect, right? But anyway, thank you very much for joining us, Sanjeev. Mr. Seth, great to have you with us here as well. If you can hear me, appreciate it here on CNBC-TV18. The market is holding with about a 14. It's not holding, actually. It's just about 10-15 points higher. We were up 80 points at one stage. We're going to take a quick commercial break here. It's the economy next. We'll just come back in a bit from now. Mitesh is going to be with us with, of course, some technical trading ideas. Stay tuned. Welcome back. You got Mitesh Thakkar now joining in with some technical trading ideas. Mitesh, already the first sell-off of the day has come through from the highs. We're up 30 points. We're up about 80, 90 earlier. Your trades?
Well, I have a sell on Wipro. IT names today are showing some signs of profit booking. So Wipro is a sell with a stop at 535. Look for targets of 502. And on the support levels is UPL. So buy here with a stop at about 570 for targets of 593, 595.
Okay, Wipro and UPL, both sells coming in from Mitesh. Thanks very much for that. It's the economy on the other side of this break. Lata gets chatting with Chetan Iyer of Morgan Stanley, and they discuss China's stimulus plan and what to expect from RBI later this week. Stay tuned.